We're just going to need a couple of minutes before we get started because I spilled a beverage on the control system. Good afternoon, everyone. Thank you for your patience as I attended to my accident. The City of London is situated on the traditional lands of the Noshbek, Haudenosaunee, Lenape, and Attawandaron. We honor and respect the history, languages, and culture of the diverse Indigenous people who call this territory home. The City of London is currently home to many First Nation, Métis, and Inuit today. As representatives of the people of the City of London, we are grateful to have the opportunity to work and live in this territory. This is the third meeting of the Audit Committee. I am joined in chambers by Councillor Cuddy as a voting member and Councillor Pribble. And Councillor Stevenson and Member Chima is online virtually with us today. The City of London is committed to making every effort to provide alternate formats and communication supports for meetings upon request. To make a request specific to this meeting, please contact accessibility at london.ca or 519-661-2489, extension 2425. I will look to members for disclosures of pecuniary interest. Okay, I have nothing in chambers or online. There's no consent items, there's no scheduled items. Under items for direction, we do have 4 items. The first one is 4.1, being the 2024 financial audit. We have a presentation that's included with it. Okay, so looking for a member of committee to move this item, noting that KPMG requests a 15-minute presentation instead of the 5 that we default to. So I have a mover in Councillor Cuddy, a seconder in Councillor Pribble. calling that question in eScribe. Nope, sorry, this one's a hand voting. So Councillor Stevenson, I would need your screen on for this one. Perfect. So all in favor, hands up.
Motion carried.
Thank you. So this would put 4.1 on the floor. Looking to Mr. Collins, if you would like to give an overview from the city's perspective before we go into our guest from KPMG.
Thank you, Chair, and to the committee. I would just like to walk through very briefly the presentation that was prepared for Audit Committee, which is consistent with what Audit Committee has seen in years past. But I would want to flag a couple of key items of interest for the committee that makes the 2024 presentation of our audited financial statements different from 2023. So in going through the presentation that was presented to you, I just would like to re-articulate that the financial consolidated report that was provided represents a consolidation of the city with 14 or 20 entities altogether, 14 boards and commissions, 3 proportionately consolidated entities, and 3 government business entities. So within the binder or the document that you see within the agenda, our financial report is close to 563 pages long, involving all those entities. The one page I'd like to draw your attention to on the presentation is slide number 3, which talks about highlights and adjustments for the 2024 financial report. And as KPMG noted back in February as part of the audit planning report, there were 3 new public sector accounting standards that were adopted as part of this statement before you. One of them was PS 3400, which relates to revenue. And Council would recall that as part of the 4th quarter or year-end operating budget status report presented back in April 30th, there was an increase in revenue as a result of the application of PS 3400, which looked at parking revenues, parking fine revenues, administrative monetary fines for forestry and parking, which also required an administrative review of all revenues that the city takes, reviewing their bylaws and where an obligation is made or is satisfied upon receipt of that money, which recognized an additional $4 million in 2024 that may not have been based on previous this standard. The second item that we looked at was PS 3160 related to public and private partnerships. Management reviewed any agreements or arrangements that the city may have with a number of the arrangements that we have in place. The one item that we determined needed extra attention was the arrangement between the city and the downtown arena, currently Canada Life Place. And in reviewing the considerations set out in PS 3160 and looking at all the parameters to deem from an accounting perspective whether or not it's a public-private partnership or not, management believes and has arrived at that it's just not a public-private partnership due to the amount of control that the city has over the pricing, over who can access the facility, as well as risk associated with that building. So consistent with how we've treated that investment before, we still have that arrangement identified as a loan and long-term receivable as identified on note 6 of our financial statements. Finally, the other public sector accounting standard that we had to take in consideration was purchased intangibles, and we looked at reviewed items that would be considered purchased intangibles, such as trademarks and easements with the city, and we've determined that for those that we hold, they're not material, and at this time we have not recognized any purchased intangibles. However, administration will be monitoring potential any growth related to easements or trademarks that have a very material financial value to our financial statements. Last on that page, slide 3, relates to 2 items that were identified through the external audit. One relates to the recognition of a capital asset, the Elgin Middlesex Pumping Station, which was an asset that was created back in 1996, well before the implementation of tangible capital assets in 2008. Based on some clarity received in late 2022 based on a joint occupancy agreement. And after further clarity was looked at, it was determined that that asset should have been recognized on the city's books. So based on what was brought forward to management's attention, that will be recognized on the city's financial statements. And the other identified item that KPMG brought to management's attention, we'll be bringing forward to you, is an issue that we had with the allocation of interest revenue between our reserve funds. So throughout the year, we allocate interest revenue to a number of our reserve funds, both discretionary and obligatory reserve funds. It was identified that in one of the spreadsheets that we used to make that allocation, there was a formulaic error in that allocation, and it was determined that we would need to do a reallocation of the reserve funds, that interest earned between our discretionary reserve funds and our obligatory reserve funds. The next slide that I'd like to bring to Audit Committee's attention would be slide number 5, which looks at the statement of financial position. And once again, it just wants to highlight that our financial balance sheet is strong. We've identified that our financial assets in 2024 increased $254.6 million. That increase was attributable to our investments, as well as other loans or other accounts receivables. Our financial liabilities increased by $77.9 million related to deferred revenue brought on by development charges. However, that was offset by reductions in accounts payable and long-term debt. So overall, our net financial asset position is $176.7 million higher than it was in 2023. From our non-financial assets, those increased by $272.2 million, and that recognizes our capital assets or our infrastructure, the work that you see get done on a daily basis to update roads, betterment to roads, parks and buildings at the city. So overall, in 2024, the city finished with an increase in our accumulated surplus of $448.8 million. The majority of that accumulated surplus reflects the value in our capital assets, our infrastructure with the City of London. The next slide is a slide that we put together. It's slide number 6. It relates to what are some of the notable capital assets that the city recognized on its books for 2024. And just to walk through, we recognized the Adelaide Street grade separation, $67.5 million, the downtown loop, Victoria Bridge, Dingman Creek Pumping Station, East Link, as well as assets assumed from developers, where we took on 12.1 kilometers of additional roadways, 12.1 kilometers of additional sidewalks, 97 streetlights, 7 kilometers of water pipe, as well as other water, wastewater infrastructure as well. And that total is about $68.8 million. Following that slide, we do provide a 5-year review and highlights of some of the key financial indicators that we've had and monitored for a number of years, where we look at tax arrears, long-term debt, debt principal payments, debt issued, our increase in tangible capital assets, our annual surplus and assessment growth. The only one item that really stuck to our attention was the increase in tax arrears. It went from a 5-year average of 4.5% up to 5.5%. What I'd like to advise the committee is that 5.5%, while it's high, it's not the highest that it has been at the City of London. When I look back in 2010, we had tax arrears of 6.3%, 6%, 5.7%, 5.6%, and 5.7% between around 2009 to about 2013. So it's not necessarily the highest that tax arrears have been at the city. When looking at some of our comparator municipalities, I've noticed that in looking at 2023, 2022, and 2021 data, our tax arrears as a percentage of our overall levy is low. I've seen municipalities with a 5.42% in 2023 versus our 4.41%. Another community was at 8.72%, followed by another community at 6.93. So when you looked at 2023 tax arrears, we're in a decent position, nothing overly alarming. There is a trend that we've seen, not just in the City of London, but with other municipalities, that tax arrears are growing. So it's nothing alarming or unique to the City of London. The last item on this slide that I'd like to draw attention to is our long-term debt. Our long-term debt has decreased. On average, it was $228 million for the past 5 years. It's now down to $194.6 million. What does that mean per household? Back in 2020, the debt per household was $1,533. At the end of 2024, it was $1,012. So the debt per household has come down. Moving to our next slide, which compares our 2024 budget versus our actual. There was a surplus as reported out back in April. This surplus reflects the adjustments needed for public sector accounting standards. The predominant drivers of this surplus have been investment income, developer contributions for tangible capital assets, lower provisions for uncollectible taxes, and the savings that we've seen in some of our programs here at the city. The other next couple of slides kind of walks through the difference between how we budget for the multi-year budget, which is based on a modified cash basis budget, and the financial statement adjustments that we need to do in order to reflect public sector accounting standards. And then we walk through what was reported back to committee and council back on April 30th of the $59.5 million surplus between the property tax supported budget and water rate supported budget, and show what adjustments are needed for the public sector accounting standards to arrive at the $418.1 million surplus that you see before you in the consolidated financial report. And last and certainly not least, I just want to recognize the cooperation and the work that's been done by all the civic service areas in helping to compile our financial report, as well as our external boards and commissions. Last year, we were challenged with some of our boards and commissions not being able to provide audited financial statements in a timely manner. I can say that the majority of them managed to comply and met their obligations, particularly with the business improvement areas. There was a concerted effort made by not only the BIA administration, but also by our audit team, as well as civic administration, to ensure that they're able to comply with the city's bylaws when they're to provide that information. We do have partial financial information contained in our consolidated report related to the Middlesex London Health Unit. You'll observe that within the binder provided, we did not have draft financials at the time of consolidation. Management felt that it was low risk to consolidate without the draft financials from the Middlesex London Health Unit. So we consolidated based on estimates looking at the prior year experience of the health unit, recognizing that they're proportionately consolidated within our books. So we felt it was safe to, at this time, bring forward our financial report without those statements at this time, as opposed to holding up presenting our financial report to Audit Committee and to the city and delaying it till September. So with that, I'd like to turn it over to KPMG and...
Sorry, Mr. Collins. Committee has questions,
sure.
I'm just going to stop and do questions of your report before we get into KPMG's for people who aren't trying to remember what their question was that they had from half an hour ago. So I will start my speakers list with Councillor Stevenson. The floor is yours.
Thank you very much, and thanks for the presentation. Could you just quickly remind us who the three proportionately consolidated entities are and the three government business entities?
Councillor, do you know what slide you're on? Just for a committee can follow along with you.
I am on page 2.
Oh, did you say 2?
Yep.
Okay, Mr. Collins.
Through the chair to the committee. So we consolidate the The three proportionate consolidated entities are Lake Huron and Elgin, joint water boards, as well as the Middlesex London Health Unit. From the equity perspective, we consolidate with London Hydro, the Fair City joint venture, and the City YMCA joint venture. Thank you.
Counselor?
That's perfect, thank you. And then on page 8, it talks about budget to actual variance. And so we had, we're saying that the budget was 58.8 million surplus, and yet this shows $163 million surplus. So if you could just explain that to the public.
Mr. Collins?
Through the chair to the committee, if you refer to page 10 of the slide deck presentation, there's a reconciliation that takes us from the $58.8 million surplus that was reported on the property tax side back on April 30th and walks and steps you through how we arrived at the overall surplus, where you take into consideration the transfers to capital reserves and reserve funds from a financial statement perspective. You don't consider those expenses that we have in our modified cash basis of budgeting as an expense. So you've got to look at those. So you transfer into those items. Debt principal payments you don't consider as an expense, as well as you look at the contributions coming in from developers for assumed tangible capital assets. Those items aren't incorporated into the budgets that go before council as part of the multi-year budget. So that kind of steps you through how you go from the 59.5 million when you look at property tax and water. Once you do all the transfers to reserves, you end up at a zero ending position, but then you look at all the contributions that gets you to the 418.1 million that you see on the slide that you referenced on page 8, where you took revenue less expenses to arrive at 418.1 million.
Counselor?
Thank you very much. I guess what I was looking for was a reconciliation between 59.5 million surplus and $163 million surplus. But I'll follow up with that online because that's kind of a more detailed question. My last one. That's actually it for now. Thank you.
Thank you. Mr. Collins, did you want to reply to that or follow up offline?
So the 163.1 million that is being seeking clarification on relates to the budget variance, not the surplus. So our overall surplus was 418.1 million. What we have in the budget relates to other items that were budgeted, such as the developer contributions, which was identified in MYB, and other items, and so we ended up with a surplus budget in our financial statements of approximately 254.9 million compared to the actuals of 418 to arrive at that 163 million. But once again, that takes into consideration what was budgeted for some items, such as investment income. You'll see in your statement of operations that the budget that we had for investment income was less than what we actually realized in terms of investment, which takes into consideration interest or investment income related to our reserve funds, which you're not going to see as part of the operating budget status report that was presented to council on April 30th, 2025.
Thank you. Councillor Pribble.
Thank you, and through the chair, I have 4 questions to the staff. First one is on page 7, developers, it states 68.8 million, and then on page 11 in the financial statement surplus, it states 77.6. I know last year when we had the same report, it matched at 44.1. So I'm just curious, what's the difference between these two reports? Thank you.
Mr. Collins?
Through the chair to committee, good question, and it was unique for 2024. Generally, the revenue taken in from developers are predominantly city. The discrepancy this go around was that the city recognized revenue from a contributed asset from HDC, a property Duluth that was transferred at nominal dollars. And I think when we split out the amount, we show it unconsolidated on that slide that you referenced on page 10. We showed the city's component above the line, and then as part of the boards and commissions surplus, we show that deficit for HDC netted in that amount. So when you do the subtraction of the 1.8 million, you net it out, and that way it would have been consistent. In 2023, we did not have a transfer of contributed asset from HDC to the city. It was very unique for 2024. That's why you see that discrepancy from what you've seen in prior years to what you've seen in 2024. It's a difference of
Councillor Purple.
1.8.
Excuse me, you also included the boards and commission, but I was just strictly looking at the, I was strictly looking at the developer's contribution, right? I was just looking straight at that. I just want to make sure that we were talking about the same thing.
Yes, we're correct. So when it comes to the developer contributions, typically it's just including city proper. But with HTC's contribution, we've categorized that as a developer. And as such, as it's part of the boards and commissions, we've identified that $1.8 million within the boards and commissions, 32.1 million, I believe that's on that slide. The contributions from developers above the line is purely city only. So it's not a netted amount. Whereas in our financial statements, we consolidated both the boards and city proper. That's why it's a different number.
Thank you for that. And by the way, thank you to the developers, because that's a great number and that certainly helps us tremendously. Assessment growth, and this year, last year was 1.68, the previous year 1.82. And I was actually surprised to do that. I was wondering what contributed or what contributes to the decrease.
Mr. Collins?
Through the chair, assessment growth is based on information coming from the Municipal Property Assessment Corporation, and they assess the property values of a multitude of properties across the city, which could range from residential properties, multi-residential properties, commercial properties, and industrial properties. And when those assessments occur, each year, properties could vary in terms of which there could be more residential getting assessed in 2023 and less so in 2024. So the composition of what properties are getting assessed could change the valuation and what that percentage means. Plus, as we've identified in our assessment growth report on an annual basis, we also know that assessment growth can be a lagging measure of economic activity. Often, MPAC will reassess new property builds a year or two after a property has taken occupancy. So generally, assessment growth tends to be a lagging indicator of the economy. And we've seen that over a number of years where the economy is doing well, but assessment growth is low. But in the following years, we see assessment growth spike up.
Councillor?
Thank you. Slide 11, and at the bottom, boards and commissions. Now I'm talking about directly the surplus, 32.1 million surplus. If I can have received comments on this surplus. Last year was actually 1.5 loss.
Mr. Collins?
Through the chair of the committee, those amounts are based on the surplus identified as part of the financial statements that the city receives from the boards and commissions. So the major contributors to the boards, to that item, would be the London Middlesex Community Housing Corporation. I believe the committee, the Strategic Priorities and Policy Committee, would have taken receipt of the London Middlesex Community Housing Corporation financial statements yesterday, and in that they would have reported a $16.3 million surplus. So that financial statement surplus, so that accounts for 60.3 of the 32.1 million. London Transit, from their financial statements, reported a $14.3 million surplus, so that goes into that 32.1 million. And then we also had the city's proportionate share of the Huron Joint Water Board and the Elgin Joint Water Board, who too also had surpluses. It should also be noted that that 32.1 million is a net amount, because there were some boards and commissions that deficited from a financial statement reporting purposes that would have brought the overall boards and commission surplus down. And a prime example would have been the Housing Development Corporation. I believe yesterday at SPPC, the Housing Development Corporation financial statements were received, and in that, the financial statement deficit reported was $5 million. So this is the consolidated amount, which is reflected in that consolidated binder that is before Audit Committee, by each individual board and commission. Thank you.
Counselor?
Thank you, through the chair. This first 16.3, who was it from? Because maybe I heard two different organizations. The first one, the 16.3 surplus.
Through the chair of the committee, that would be London Middlesex Community Housing, LMCH.
Counselor?
Thank you. And last question, the accumulated surplus 276.64, and now we even was higher last year. Now we almost double it, 448. And I see the broad explanation, which is below this, but can you give me kind of more tangible examples, because it's a great increase. But I was just wondering, because last year increased 276, this year increased 448. Those are very large numbers. Just some specific examples. I know below it just says broadly what it is in terms of the infrastructure assets, but can you give me some examples?
Mr. Collins?
Through the chair to committee, contained within the consolidated financial statements, there are a number of notes that pertain to various components of the financial statements. I believe note 21, revenues, would be very informative for committee to see where there have been changes year over year in the revenues recognized by the city, and it breaks down the revenue classifications from municipal taxation. So we know with the tax increase last year, there was increased revenue coming in from taxes. User charges increased in that we recognized close to $30 million in 2024. There was also increase in transfer payments coming from other levels of government to support our infrastructure initiatives, as well as our operating grants for some of our programs, such as Ontario Works and childcare. We also recognized investment income, which was a big item in 2024, which we identified also in our financial statements as a contributor to that overall accumulated surplus. So I would suggest one area that committee could look to see where that change came from would be note 21 in our financial statements.
Counselor, you good?
Thank you for answering my questions. I just want to make a comment. Congratulations again to the AAA rating, and again the balance sheet and the financial indicators, which are certainly positive and makes very strong balance sheets. Thank you.
Thank you. I have no further questions at the time. We can always go back to more questions, but we'll roll into KPMG's presentation. It's just going to be up with some technology as well. For those in chambers, you can hit your screen button to be able to see without turning around. And we'll start in one moment. And Ms. Denbach, if you want to introduce your team, feel free to do that when you start your presentation.
All right, through you, Madam Chair, and to the committee, thank you very much for having us here this afternoon. As a reminder, my name is Katie Denbach, External Audit Partner for the City of London and its boards and commissions. And I have with me here today Melissa Redden, Audit Senior Manager, and Emily Pellerin, Audit Manager, who have both been heavily involved in the audit of the consolidated financial statements that are before you today. We are going to walk you through the highlights of our audit findings report that has been contained within your package. When we refer to page numbers, they will be the page numbers at the bottom right-hand side of our audit findings report, just to help you follow along more easily. And so I'm going to start just by giving a quick reminder. There are certain items we are required to communicate with those charged with governance. So those items have all been contained within this report. And we've also provided some additional information for you for further interest and discussion. So we're going to speak to the highlights of our audit findings, including areas of significant risk, uncorrected audit misstatements, which Ian has already referenced here, as well as other control deficiencies that we've identified. So I'm going to scroll through here to the status page, which is slide 6 of our presentation. At the time that this report was prepared, on June 3rd, we had a number of items, a small number of items, I will say, that were outstanding. These are well underway with just bits and pieces here to wrap up, as noted, so nothing of major concern in order to complete our audit. Having our discussion with the Audit Committee here today, the completion of these procedures, as well as subsequent events procedures, receiving the signed management representation letter, which will be done once council has approved the financial statements, are the final remaining items before we are able to issue what we expect will be a clean or an unmodified auditor's report once again this year. One item we did want to bring to your attention because it represents a change from the audit plan that we delivered to Audit Committee back in February. You may recall this is considered a group audit, meaning we have a consolidated level of materiality as well as a component level of materiality for significant components. So we did just want to let the committee know we had initially communicated a materiality number of 22.5 million for the non-consolidated City of London component. Upon actual finalization and our group scoping that we do as part of the group audit, we revised this number to be 24.5 million. So it resulted in an increase in the components performance materiality from 16.8 million to 18.3 million, but did not change our audit misstatement posting threshold for this component, which is $900,000. There was also no impact to the group materiality that had previously been communicated at $25 million.
Okay. Pages 8 through 13 highlight areas of risk where audit findings have been noted or where we've highlighted the new standards which management has discussed previously. So I'll go through these at a relatively high level with the assumption that you had a chance to read through this, and I know management has also walked us through many of these areas at this point as well. Starting on page 8, we've noted the risk around the public-private partnerships, and through the procedures we've performed as well as discussions with management and assessment of their analysis, we did not identify any findings nor any relationships that fall under this standard. Pages 9 and 10 discuss the risks addressed in relation to tangible capital assets. We performed the audit procedures that were identified to you through our audit planning report, and we did not note any significant findings other than the one matter relating to the Elgin Middlesex pumping station joint occupancy agreement, where one of the buildings was determined to be owned by the city but not recorded in the asset registry. As mentioned by management, this was corrected through 2024 for a total net book value of $1.3 million. As this does relate to a prior period error, we have also noted an uncorrected error in relation to that as well. Pages 11 and 12 discuss the risks around revenues and receivables, and notably the implementation of PS 3400 for other revenue. As noted, management assessed the various qualitative aspects when looking at the various revenue streams that they have and what the impact may be. Mostly relating to fines, penalties, user fees, and permits. Those were larger focus areas, and the appropriate analysis was performed and reconciliations made by management, and we performed work over that. As Katie did note earlier, we do still have procedures that are being wrapped up, but as of today, there have been no significant findings. Page 13 looks at the general deferred revenue as well as the obligatory reserve funds. Through our procedures, we did note an error in the interest allocation workbooks, which were noted earlier, which are between obligatory and discretionary reserve funds. It was determined that the error was through September through to December 2024, and this resulted in an uncorrected misstatement of 1.3 million overall this year, which will be discussed further.
On pages 14 and 15, we discuss the accounting policies and practices at the City of London. As noted by management, there were 3 new accounting standards that became effective for fiscal 2024. These were all applied prospectively. We have included information on page 15 of our report relating to the actions taken by management to determine the impact of the standards on the financial statements. Ultimately, the revenue standard was the only one that required an adjustment upon adoption beyond disclosure. Page 16 of the report discusses some other financial reporting matters, but just to note that the presentation and disclosure in the consolidated financial statements is in accordance with the required standards, and the procedures completed over the implementation of the new accounting standards were consistent with those communicated in our audit planning report, and no matters to report in relation to these. Moving on to page 17, as Emily noted, there were uncorrected misstatements. This page provides some additional information on these, including the overall impact. The annual surplus is overstated by $2.5 million, which is less than 1% of that balance, and total assets are understated by $71,000. These are not considered to be material and have no effect on our auditor's report. Page 18 shows the individual and aggregate impact of those 2 uncorrected misstatements noted, which were greater than our audit misstatement posting threshold of 1.25 million at the group level. As just discussed, these are not considered to be material. Page 19 of our report has information on control deficiencies, including what would elevate a deficiency to a significant deficiency. Page 20 notes one control deficiency relating to the interest allocation error, along with the plans that management has in place to remediate this for 2025. On page 21, we have included information on audit quality and our framework. And on page 22 are the audit quality indicators that were included in our audit planning report that we had indicated we report back on. So this is just us reporting back on those now, and no areas of concern to raise. Page 23 is just includes some information on independence and to confirm that we are independent of the city. Which brings us to our appendices, which include some required communications, the draft auditor's report, management representation letter, as well as some information on new auditing and accounting standards that are upcoming.
And that concludes the highlights of the audit findings report.
Thank you. That was just 9 minutes and a few seconds. Good job. Looking to committee or including those online, happy to start my speakers list. I will start with Councillor Pribble.
Thank you, and through the chair to KPMG. Thank you for the report, and actually your explanations are very detailed, so I actually don't have additional questions on this one. I wanted to ask though, and to the staff as well, actually very happy that we have no significant risks, so that's really good, positive. Last year we had 2 of them, and one of them was risk of material misstatement due to fraud resulting from management override of controls, and PS 3280 asset retirement obligations. And I just want to make sure, and I was comparing the 2 year ends. Potentially there was a progress during the year, which I haven't reconciled it with. But can you give me an update on these 2, if they have been addressed and closed?
Ms. Denbach?
Yes, absolutely. Through you, Madam Chair. It's a good question. So the risk, to clarify, the risk of material misstatement relating to management override of controls is always present. So it does still exist. and we do perform procedures around it. It has not been highlighted in this report because we had no findings to report as a result of it. But in our audit plan, you will see that it has been communicated as a significant risk. It is in every single audit that we do. So there's nothing that the city could do to remove that risk. It always exists. We did perform procedures to address and assess that and don't have any findings to report on that matter. With respect to the significant risk over the asset retirement obligation standard, you may recall last year was the year of implementation of that standard, and there was quite a lot of work, quite a lot of estimates involved in coming up with the city's liability for the asset retirement obligation. And it was because of that that it was assessed to be higher risk in year one, in that year of implementation. Now for fiscal 2024, the liability has been set up and really it's just adjusting for any changes in that liability year over year. And so we did not assess that to be high risk in 2024 because of that.
Councillor Prevost.
Thank you very much. No more questions.
Thank you. Councillor Stevenson.
Thank you. Just a question on page 12 where it talks about the accounting practices, enforceability and collectability on accounts receivables. It says that it was noted that fines should be recorded when they become enforceable. And I just wondered what the policy was prior to this.
To Mr. Collins or KPMG? Anyone?
Through the chair of the committee, previously for some of the revenues such as POA fines, we've recognized the revenue based on the cash basis when we actually took the receipt of the money. Now, through the analysis that was done as articulated through the requirements under PS 3400, it was when the obligation is put forward to the payee and to the city. So now, once a POA fine has been issued, that's when we start recognizing the revenue.
Okay. Councillor Stevenson?
Thank you. Yes, because it's an interesting thing around the accounts receivable, and I guess, and staff can correct me if I'm wrong, but I don't believe council has any overview of accounts receivable other than these audited financial statements. And I wondered, through you, Chair, to the auditor, are there best practices around governance in terms of maybe, I know some cities get an annual report each year outlining, beyond the net receivables, the amount that was written off and that kind of thing?
Ms. Denbach?
Through you, Madam Chair. I wouldn't say I'm aware of any best practices per se. It would all depend from organization to organization on both the materiality level of the accounts receivable and I would say the risk associated with it. So when it comes to the audit procedures that we perform, we really focus on the statement of financial position. What is there? Does it meet the definition of an asset? And we perform tests around the various assertions relating to that, the completeness, the accuracy, the valuation of it. But in terms of best practices, I would suggest it would vary from organization to organization.
Councillor?
Thank you, and that's fair. And in terms of netting out the receivables and showing that on the financial statements, is there value in having a note that clarifies what the gross amount was and the amount not collected?
To Ms. Denbach?
Yeah, happy to respond to that. I believe that disclosure is included within the financial statements in terms of the accounts receivable and any valuation taken against it should be reported in the note to the financial statement. And I don't have the note in front of me, the exact note number, but
That's fine.
Yeah.
Yeah.
Councillor?
I don't.
Councillor, you're muted.
Yeah, sorry. My last question is, again, and it might be the same answer, but it's around the reserve funds. And and I understand that seeing the details in and out wouldn't impact what happened here in terms of a calculation error. But I just wondered again, actually, I think I'm just going to leave it. I'm good.
Okay, thank you. Mr. Chima.
Thank you, Madam Chair, through you. The follow-up question I had was on the reserve fund as well. So it's great to see that there are mitigation actions that management has committed to. Wondering if there were additional procedures that were performed to ensure that this is not a pervasive issue and it's limited to one specific Excel workbook in terms of the review of journal entry or the review of the preparation of these workbooks.
To staff or, to KPMG, please.
So with regards to the error that was identified, we did take a look, and this was a sample that we performed. So we did take a look at the different types of items that were within the detail for this account, noting that the error related to a specific type of workbook. We obtained all of the workbooks for the year relating to that to confirm and check the mathematical accuracy of all of those workbooks in order to conclude that we did not need to extrapolate that error further to additional balances in that population.
Thank you. Member Chima?
Thank you. And just to follow up, so but that's at the account level?
To KPMG?
Yes, that's correct.
Okay, thank you.
Okay. Looking to members online or in chambers to see if there's anything further. Okay, I would need a motion to receive the report that was in A and the report that was in B. Moved by Councillor Cuddy, seconded by Councillor Pribble. Okay, so it's going to be a hand vote. All in favor of receiving those reports?
The motion carries.
Thank you, and thank you to KPMG. That concludes your time with us here today at Audit Committee. We're going to give just a brief moment as we transition into our partners with MNP as they come forward. So just one moment. Thank you. So this brings us on to item 4.2, being the internal audit follow-up activities dashboard. Mr. Racco, did you want to give a brief overview? And then for committee, we'll be looking for a motion to receive the presentation and the information in the report. So to receive is going to be Councillor Cuddy, seconded by Councillor Pribble. So we're going to hold off on that, but we're going to do a brief presentation, then I'll take Q&A from committee members. And welcome in chambers with us today.
Thank you. Through you, Madam Chair, to the committee. Thank you for the welcome. It's good to be here with everyone today. So we would be going through items 4.2, 4.3, and 4.4 on the agenda. The brief overview is that 4.2 will be the standard dashboard that you have seen with regards to the progress made and follow up on activities. And then 4.3 and 4.4. Just
4.2 at this moment.
My apologies.
Sorry.
Then no overview. That's my overview.
Perfect, that was concise. So we're in 4.2, starts on page 58, looking to see if there's any questions from committee, online, or in chambers. I'll give you a moment just to flip through those pages to see your notes. Okay, yeah, so this starts on page 58, and I will start my speakers list with Councillor Stevenson.
Thank you very much. My questions are regarding the vendor risk management audit section, so the bottom of page 59 and onto page 60. It talks about the periodic, so point number 2 on page 60 is periodic performance evaluation of vendors. And I just wondered if, given that we didn't fund the business case, I wondered if there was a prioritization in terms of evaluation of vendors. And I'm specifically wondering about the limited tender or the untendered contracts that we might have versus tendered ones.
I'm happy to go to our guests with MNP and staff, just to round out the answer. It's up to you to see who starts it off.
Through the chair to the committee, recognizing the observations made by MNP with respect to vendor management and evaluation of vendors, and notwithstanding that, the business case that we put forward in order to address these observations, we obviously had to scale back what our intention was. However, just recently, through the Infrastructure and Corporate Services Committee, Civic Administration put forward an update to the procurement of goods and services policy, and contained within that policy is we've increased some language and sections related to vendor management, specifically Section 29 of the procurement of goods and services policy. We have a section talking about contract management and supplier performance. Section 30, we have an item there with respect to a supplier suspension, followed by Schedule C that talks about supplier code of conduct, and a Schedule D speaking about suspension protocol. Also contained within the updated procurement of goods and services policy, we did highlight expectations on contract management and what expectations need to be identified within any agreements that go before the city and a third party, setting up those expectations, how those would be monitored, and what's the ramifications. So hearing from MNP about where things could be tightened up, we look to tighten it up through the policy, and in the event that council moves forward with the policy, we'll look towards implementation and preparing guidance documents for the number of service areas, particularly of this change, to make them aware of the expectations of the agreements that they set forth with our vendors and suppliers. Thank you.
Councillor? Sorry.
Yeah, anything from the
would
auditor there?
Okay. Sorry, I had promised to give MNP an opportunity if there was anything to add in.
Yeah, no, I would just say that given the funding limitation on the business case, I think management has done well to kind of produce some workarounds, and the revised policy should definitely help tighten up the contract management components and address a lot of the risks that were identified from a third-party risk management perspective. So hopefully that policy is approved, and then the supporting tools and templates will help with that guidance.
Councillor Stevenson.
Thank you, and through you to the auditor, any recommendations there on terms of oversight and governance by council in terms of the vendor evaluations and that type of thing in terms of reporting out and oversight?
To MNP?
Yeah, do you want to sit there? That's a great question. I think once that policy is in place and once we can understand what tools and templates can be developed by management, we'd look to work with them to understand what type of reporting could be produced. Most likely there could be some form of annual reporting on some of the higher risk vendors, but obviously this would be in discussion and in consultation with management. So once that policy is approved, we definitely would work with them to understand what could be provided.
Councillor Stevenson?
Okay, that's great, thanks. I also wondered if the provincial and federal Auditor General reports in regards to homelessness services in particular, if that was addressed through the changes made to the policies through the ICSC that just came through for procurement, or what might be coming through with subsequent follow-ups with the auditor.
Through the chair, yeah. So we have not reviewed the final iteration of the policy as it's going through some small changes and will be provided for approval. Once approved, we can work in consultation with management to see if council has preferences around certain standards. From our viewpoint, we're looking at it from a lens of more leading practices and what we're seeing across other municipalities in terms of how they're managing their high vendors in terms of risk. But if there is a preference or council does have any views in terms of what they see as leading practice, we'd be happy to discuss that with management and hold that as a standard as well.
Counselor?
Thank you. If I could just have an answer from staff as well around that, that would be great.
Yep. To our finance team?
Thank you, through the chair. So the draft policy is before the committee earlier this week and will be going to council for approval. Certainly, we have tried to implement as many things in relation to being able to report out to the council through a regular process as part of that policy update. So in looking at the policy review and taking into account very, very significant recommendations from the Collingwood Judicial Inquiry, where there were a significant number of best practices and recommendations made through that inquiry, specifically with respect to procurement. That has been our guide, notwithstanding the additional recommendations that have come forward that we have tried to address through the policy update that were through the M&P internal audit. So many different factors that have fed into that procurement policy, as well as looking at a number of municipalities across Ontario and what their procurement policies are and what those best practices are. So certainly that is what has informed the revised policy and modernization of the policy before the council that will be looked to be approved next week. So that is basically how we have taken all that information and put forward the best recommendation of what the best practices are to ensure that all of our legalities and essentially a fair and transparent process has been implemented and can be implemented within the resources that we currently have at the City of London.
Thank you. Counselor?
Thank you. I appreciate that. And just for clarity, if staff wouldn't mind confirming whether the recommendations in the provincial and federal Auditor General reports regarding value for money and homelessness were taken into consideration?
Thank you. I'm just going to flag that some of the stuff isn't actually before us in this report. And our member online would have no information or knowledge of this as it's still coming through committee and council. If staff
Fair enough.
Okay.
Maybe what I could say then is through you to the auditor, in doing the review of these new policy updates, will they be looking at the recommendations from the provincial and federal Auditor General reports regarding the value for money on homelessness?
To MNP?
Yeah, through the chair. Councillor Stevenson, can I ask specifically what aspects of the homelessness value for money you're referring to in terms of the vendor risk management component?
Yes, thank you. I'm referring to the vendor performance.
Okay. We, again, like I said, we had definitely considered some of the leading practices, also in consultation with management, understanding the resource constraints that they may have. But absolutely, like I said, we're more than happy to take a look at that and see how that can be factored into the actual policy. So not a problem with us to work with management on that, but thank you for clarifying that.
Thank you. Counselor, anything further?
Yeah, just one follow-up question then. In hearing that MNP is looking at the policies that have come before the Infrastructure and Corporate Services Committee, is there some value in us waiting until we hear back from the auditor prior to approving those?
Through the chair, no, I think the policy is actually pretty well established, and it is for your review. What we could do is look at it from the lens you suggested from the value for money piece and maybe provide management with some guidance in terms of how maybe they may want to enhance certain procedures, but I think that's pretty well established at this point, but I would pass off to management to see if they had any additional comments on that.
Ms. Barbone?
Thank you, through the chair. So certainly where we would be looking to provide that additional support is the specific implementation tools that would look to actually do those reviews after the fact when the policy's been implemented. So certainly we've put a run date. There is a significant modernization of this policy to align with trade agreements, as well as to take into account the very robust recommendations that came forward from the Collingwood judicial inquiry, and certainly by looking at how we can mitigate the risk. With respect specifically to the contractor performance pieces, that is not only set out in policy, but it'll be the procedures that we then follow through. Given that we're still in a decentralized model, what we would have envisioned to be able to implement a robust performance management for contractors specifically will be decentralized. So it will not operate in the same manner and will be subject to providing the guidance and the processes in place so that all of the areas in respect to their contracts that they put forward are then following through with that process. So the procurement process and the policy sets the framework and the guidelines then that the expectations of what then needs to be actually transpire and followed through with the process and with the direction. So it will not be the implementation tool, it will be the policy guidelines and the framework which that set out the expectations that we would then deliver on. So from a policy perspective, we have that well in hand and have a great deal of robust backup for why we're making those changes and recommending those changes. The actual follow through with the implementation and the tools and techniques for which we then follow through with the policy direction will be what we are working to implement as soon as that policy framework is actually approved by council.
Thank you. Yeah. Looking to see if there was other questions or comments. Okay, MNP.
Yeah, sorry, through Madam Chair. And Councillor Stevenson, what we would be doing then is when we're supporting management as required with some of the evaluation of those tools and templates and procedures, that's where we would factor in some of those additional leading practices and see if they could be incorporated into the practices that they would adopt. The policy itself, like we said, is pretty much well in hand.
Thank you. Looking in chambers, Councillor Prival.
Thank you, through the chair, and I think this question is actually to our staff. Under the vendors, we have 5 management action plans, and I just want to make sure that all of them have, of course, the Q2 2025. I just want to make sure that all 5 are included, what was presented to us and what's going to be in front of the council.
Mr. Collins.
Through the chair to committee, a lot of our responses to the observations may be taken into consideration. Our capacity is being brought through the policy. So we put Q2 2025 because our anticipation was that we would put forward the draft policy to committee, which was done this past Monday. And as the Deputy City Manager Finance Supports indicated that it would go to council for approval next week. So upon that approval, we're within line with what we've set forward in this document. So subject to council, by the next time this rolls around, it would be approved for the next audit committee, except for vendor management reporting. Thank you. For Q3 2025, but we wanted to ensure that the policy gets approved before we identify how we're going to report out on some of the practices.
Councillor Prival.
Thank you for that. And through the chair to MNP, I wanted to ask you, last year we had 2 high maturity ratings for governance structure and for risk assessment and business impact analysis. Both of them are ongoing, but as they're ongoing, they are not currently in the report, any update. How do you work with our staff when they are ongoing in terms of there are certain steps, certainly done, recommendation and consideration, management response, but how does MNP work with our staff to make sure that it still goes back to it and reviews these ongoing issues?
To MNP.
Yeah, through the chair, and thank you, Councillor Pippa, for that. What we do is have discussions with management to see exactly what's going to be incorporated within the policy, and then from our viewpoint and our lens, see how that risk is going to be managed. So from our perspective right now, given that management had to kind of circumvent on the original management recommendations based on the business case not being approved, with management now taking, I guess, alternate action plans, we've worked with them to ensure that some of those risks are going to be encapsulated within the policy. The next step would be once the policy is approved, as management has alluded to, we'll make sure that the appropriate tools and templates are in place and they consider the appropriate factors. Some of those things would consider materiality, different types of risk, how they're quantified, qualitative aspects to make sure that those high vendors would be considered. So we're working in conjunction on that quarterly basis. We do have these discussions. Like I said, management did have to move around a little bit. So what the reason for some of those delays obviously is because we did have to come up with an alternate action plan. But I think we've been very pleased in terms of what we've been seeing and what that dialogue looks like.
Counselor?
Thank you for the detailed answer, and one quick follow-up. So if it's certain things that are ongoing, and if there's no report included now, am I assuming correctly that the staff is working according to the plan to accomplish those results?
To MNP?
Yeah, through Madam Chair, yes, that's exactly what we look to. At the end of the day, we want to provide the update here. So if management is not going according to the action plan, that's something that we would flag in this committee. But the due diligence done behind the scenes is captured. It's just obviously we're reporting against where we see an anomaly, and obviously happy to have those conversations during this council meeting.
Counselor, you good?
Thank you very much. No more questions.
Okay, Counselor Stevenson?
Thank you. I just had one quick follow-up and not to belabor this point, but I just wondered in terms of vendor performance and evaluation and knowing that the homeless service contracts are multi-million-dollar untendered contracts, is it reasonable for us to assume that that will be sort of a top priority as this gets implemented, or are there other areas that are more of a priority?
Not sure who would like to start that one off.
So just through Madam Chair, so I think once the policy is obviously approved, to answer your question, I think that would be management would do an evaluation to see where the priorities lie. And at that point, obviously, apply the new policy and roll out those procedures accordingly. But happy to have management comment on that.
Yeah, thank you through the chair. So certainly the first step is the policy framework, and then as we do not have an implementation date until later this fall, which gives that time to complete the tools and the templates and that work that then has to be put into place as we move forward. So certainly from a risk management perspective, that's something that we would need to define what that criteria is and start to look at what kinds of risks and how that factors into some form of a matrix to identify what would be identified as risky and trying to look to mitigate those. There, from a safety perspective, there's many facets that we would look at as to how we put that forward with respect to whether it's dollars. There's many things. So we haven't developed those tools yet, and those will be the next steps that we would look to bring forward.
Thank you. Counselor, are you satisfied?
Yep, thank you. I'll just say that, to maybe keep in mind that we've got the 2-year shelter contracts coming up for renewal in February. So it'd be great as council goes to make these big decisions again on multi-million dollars, having any extra information as we do that would be great.
Thank you. Looking for further speakers? Nothing online? Nothing in chambers. It's been moved and seconded to receive the report that was before us. All in favor by a hand vote?
The motion carries.
Thank you. This is 4.3 next, being the Community Grants Program Value for Money Audit, also from MNP. This is also going to be a motion to receive the report. Looking to see if someone's willing to put that report on the floor. I have a mover in Councillor Cuddy, a seconder again in Councillor Pribble. Turning it over to MNP if you want to provide a brief overview before we start Q&A. If not, we can jump into Q&A. Your call.
Through the chair, I think we're comfortable to move into Q&A if we can treat them as read.
Thank you. So I'll give you a chance to turn to page 63 is where this report commences. I'll give you a moment to flip to your page and I'll start my speakers list. Should there be any questions? Okay, I will commence with Councillor Stevenson.
Thank you, and thank you for the report. For me, on page 69 in the summary of observations, 2 and 3. So 2 talked about the overlap in strategic areas such as housing, homelessness, where funding is already provided through other specific programs. And 3, where it talked, especially at the end, where it says there is no interim reporting to City Council outside of this on the progress made by grant recipients in achieving expected outcomes and results. And so that part I'm very interested in, and I'm wondering if staff or the auditors have anything further to add there.
Thank you. I'll start with MNP and then staff can add in if they wish.
Thank you, through Madam Chair. And to answer your question, Councillor Stevenson, for number 2 around targeted funding, we want to make it abundantly clear that there are duplication checks that are performed by management to ensure that we're not double dipping in terms of the allocation of funds. The rationale of putting this forward was really around there are different program areas where applicants could have accessibility to receive funding. So there is an opportunity to refine that. And what I'd like to do is pass that over to management, and then maybe they can speak a little bit more about that specifically.
Staff?
Thank you, and through the chair, that is correct. We worked with the auditors as civic administration. We were very considerate of the risk of right-sizing the program scope. Currently in the community grants policy, we have no duplication. So for example, if an ABC emergency shelter applies for funding through the community grants, they're already receiving funding through the homelessness program. The policy says you can't duplicate whether it's a grant or a purchase of service agreement. So you can't get your funding and double it in 2 areas. So as part of We Knew Council's interest in when we reviewed the community grants program was to reduce the scope. Right now, if you align to the strategic plan, you can apply through the City of London Community Grants Program. So as a recommendation from the auditor is to narrow the scope. So for example, if you're applying for homelessness funding, then you would go to the homelessness service area and portfolio. If you were applying for arts and culture, you would go to the Community Arts Investment Program. So then it allows us to narrow the scope of our program moving forward so that we can look for those areas where there's no other aspects of municipal funding available.
Councillor?
Thank you, that's great. So then my questions just remain on number 3.
Maybe I can go first through the chair. So number 3 was really around, we appreciate that currently, I believe a report is provided towards the end of the program, which is quite robust and it's provided to council. What we did know is that management does have their own interim reporting. They do obviously perform all the required tasks per the program, and they are quite robust in terms of their review in terms of expected outcomes. However, there is a long period of time before council does get that line of sight. So as one of the possible recommendations to allow council to have that line of sight and visibility, and given that the program does do that reporting internally itself, we suggested that should council want to see that, it's a fantastic opportunity for them to display the work they're doing, which obviously is taking place, but also for awareness purposes. And with that in mind, I'll pass it back to management to respond.
Okay, to staff.
Thank you, and through the chair, that is correct. Because we have a multi-year program that goes every 4 years and is tied to the multi-year budget, we report out on outcomes and impact every 4 years. So we take our annual stream and put all those 4 years and our multi-year stream in one. So the recommendation from the auditor suggested, if council wishes, that we report out annually. As the auditor said, we do collect annually. Some we collect biannually and quarterly metrics and outcomes and impacts. So if council so wishes, we could report out annually on the outcomes and the impact of the program. Part of this was part of our overall review of the London Community Grants Policy, and we've been directed to bring those changes to the policy back in 2027 to impact the next 4 years, 2028, and to the next multi-year budget. But if council wishes and directs us so, we'd be happy to report out annually for 2025 and 2026, if you wish.
Councillor?
Thank you. So I guess the follow-up question is, how would council express that wish?
Just 1 second. Okay, I'll let Ms. Smith comment, and then I'll provide chair remarks.
Thank you, and maybe the clerk can confirm with me, but I believe in the action plan, under number 3, additional program reporting opportunities, we have developed a more frequent reporting timeline to help assess the impact. And there we put the timeline to be the next multi-year budget. I believe council could make a recommendation to implement that for beginning to report out 2025. We could report out 2025 in Q1 of 2026. If so desired, council could make a recommendation then to change the timeline in the proposed audit document to start reporting it out in next year.
Councillor Stevenson, the clerk has advised that Audit Committee can make that recommendation if we would like to do that today. I'll just let that sit with you to see what your thoughts are.
Well, I'd like to hear from my colleagues, but I would certainly support that.
Okay, just to help the conversation, just I didn't have any immediate hands up, the clerk would read out what that would potentially look like for committee's information, and then Ms. Smith can give a nod or a nay, and then we can go from there.
Thank you, through the chair. Very simply, it could be an amendment to change the timeline in the proposed audit document to an annual reporting.
Okay, and I see a nod from Ms. Smith. Councillor Stevenson, I have some nods in chambers, but looking to see.
I'm happy to move that.
Okay, so you're moving that. I have a seconder in Councillor Cuddy. That amendment is on the floor. Looking to see if we need further discussion on it. If not, it would be calling the question just on the amendment of changing that to an annual report out instead of waiting the 4 years. Making sure I see no one online, no one in chambers, so calling the question via hand vote of just those in favor of that annual report out.
That motion carries.
Okay, so the main motion as amended is to receive that report annually going forward. Continuing my speakers list as we go, should there be any. Okay, my only question, if you'd allow me through the chair, is just on page 68. It was outlining the composition of the community review panel and cited City of London staff 1 to 2 members. Just looking to Ms. Smith to see like what staff is that? Is it deputy city managers there in that space in the conversation, or is it just the staff who would normally, I shouldn't say just the staff, or staff who would normally work front lines implementing some of this program work, just looking to see who we would send into that discussion.
Thank you, and through the chair, it is 1 city staff member, and it's Ms. Pollock, the Director of Community Development and Grants.
Perfect, thank you. Looking to see if there was further questions or comments on 4.3. Checking online one last time as I have no one in chambers. Okay, calling the question for the main motion as amended, being to receive the report overall and the update annually.
That motion carries.
Thank you. That moves us on to 4.4, which is the Safe London for Women, Girls, and Gender Diverse and Trans People Compliance Audit, also via MNP, who's with us today. This is going to be a motion to receive their report. I have a mover in Councillor Cuddy, a seconder in Councillor Pribble. So that item is on the floor, looking to see if MNP would like to provide an overview on this one, and then I will turn to committee for any questions or comments.
Through you, Madam Chair, we're good with overview if you would like to move forward. Thank you.
Okay, so that was no overview?
Yes, no overview.
Okay, so the report starts on page 77. Give you a moment to flip to that, and then I'll start my speakers list. Okay, colleagues and James are still flipping through their pages, looking to see if anyone wanted to start off as speakers. It's okay. Sorry, I look strange here on screen, so I'm trying to see around other screens. Councillor Stevenson, you can start the speakers list if you wish.
Thank you. We've had long discussions about this one in the past, and I'm not going to go back through it, but as an overview, I've expressed my concerns around the strategic plan and how it was actioned in regards to a safe London for women and girls, and then to have this evaluate that does not seem like a good value for money thing from my own perspective. On page 79, 2.0, the objective, it states that the objective of this audit was to assess the city's progress towards the execution of approved activities under the strategic focus area. And it was approved, not approved by council though, because the activities, I believe, anyway, I could be incorrect, but I believe those were just received by council, not approved. And then it says this involved evaluating the progress made by key stakeholders against identified action plans and identifying any issues or delays. So I guess my question is, if we're evaluating the progress made by stakeholders, are those all internal city staff, or are we looking at external stakeholders there as well?
Would MNP like to start this one? Okay.
Through you, Madam Chair, and thank you for the question. With regards to the specific question with regards to the internal versus the external, as there's a section 3.0 that follows directly after the objective. It highlights the scope. The second paragraph there notes some of the exclusions. Number 2 under those exclusions highlights that contracted agencies or community partners were not included within the scope. So in short, it was focused internally on the city. They were the key stakeholders that we were looking towards the progress being made.
Thank you. Councillor Stevenson.
Okay, thank you. So I guess I'm going to just keep my comments really short. I'm going to be voting against receiving this, and it's nothing against the auditors or the work that was done. I just feel that in a city that has some very serious public safety concerns, and especially regarding women, women feel very unsafe in our downtown, in our shelters, in our social housing, and walking around, even taking the bus. And so I just really feel like we've missed the mark and an opportunity to take precious dollars and auditing time to just really focus on things that are more just not what the taxpayers that I represent want us to be focused on. So I just recently was at another Board of Governance training mechanism, and it talked, or training session, and it talked about strategic plans and how there's inputs, activities, outputs, and outcomes. And we so often, from what I've seen here in the City of London, is we stop at outputs. We're counting what we did, the surveys that we took, the trainings that we did, but Londoners are desperate for outcomes. We're desperate for a safer London for women and girls. So as I said, no debt, I really don't mean this. I'm going to be voting no to receiving the report, and it really doesn't have anything to do with the report at all. But I thank you for your time.
Thank you. Looking to see if there's further speakers or comments. I will move to Councillor Pribble next.
I will just make a comment. Looking at the MNP report, the scope that was done, I truly believe that there was not as much opportunity to go any further. Having said that, I will certainly vote yes for this report. We do have past the outcomes, we do have implementation plan, which includes the actions, timelines, and responsibilities. And that is the part that I do believe that we certainly can improve. I would not totally agree that with a comment, because I've spoken to a few people as well, that actually safety, and it's not just for women and men, overall, and we hear it, especially downtown, I hear it, that there is an improvement. So I do believe we are on the right track. Do we have a lot still work to do? Absolutely, we do. So the only thing is what I would say is for MMP, I don't know how far you go. We do have a strategic plan, the pyramid, and in the pyramid, we do have, it starts with the vision, outcomes, and the bottom line is the implementation plan. And that's the one that I always consider kind of the most important one. That's really is the accountability actions timeline. And this is a room certainly for improvement, that we can go further as a city, as management, as the council, and then for you to make more of a review and analysis. I think that right now, when I looked at it, I quickly went to our strategic plan. So with the scope, there was not as much opportunity for you. Having said that, when we'd have the more detailed ones, I really would like you to pay attention to the implementation plan and audit us towards those more details areas. So those are my comments. Thank you.
Thank you.
Sorry, I just want to give, through the chair, any feedback from actually MMP for what I said. If you were to agree with this process going forward, doesn't matter if it's just this area or any other area of focus.
Thank you for the councillor's comments to provide him feedback.
Through the chair, thank you, Councillor Pribble. I agree. I think one of the interesting things here is we're in the middle of the multi-year strategic plan. And as a part of that, some of these management action items are actually in the middle of their delivery. So when we're coming in, again, we're not at the end of the journey to see how successful they are. I believe if a lot of these action items are completed, we would get the desired outcomes. But given kind of the timing we came in, it was an opportunity to see if those were still the correct plans, have those dialogues with management, see what the tangible progress was to make sure that we're kind of in line to achieve those outcomes. But I do agree with you. I think coming back after the fact and looking and seeing that progress, I completely agree with the approach that you've outlined.
Councillor?
Thank you for that. And I just want to make one comment. And the comment would be is when you said that you came at this timeline. One thing is, I would rather prefer, if the opportunity is there, to wait rather one cycle and to have it really completed audit, which would include these specifics and addressing the detail of implementation plan, if that were to happen in the future. Thank you.
Thank you. Would MMP like to comment, or I'll do others?
Through you, Madam Chair, just thank you for the feedback, and we appreciate it.
Councillor Cuddy? No, okay. If the committee would allow, I have one question through, I guess I got one question. I can't really go through myself. Under on page 82, it's delays in evaluation of city administered training, as this now falls under ARAO, which is in our city manager's department. And it's looking to see if a review of the mandatory responding to domestic violence and human trafficking, as the city is doing that with employees, if it's still efficient, having the impact that we need. I was just wondering, because on page 81, it also mentions the bystander intervention training and the domestic violence training. So just, where's the bystander intervention training? It seems to have, it's mentioned on page 81, but it's not mentioned in the details. Are we still looking at doing both or reviewing both? If staff would like to reply.
I'm happy to start, Madam Chair, through you. We do both training and both continue throughout the organization as well.
And then we'll continue to audit to see if both are having the desired impact and uptick that we hope. So I see Sanjay behind you as well. Just sorry.
Thank you for the question, Chair. We are going to be doing quite a comprehensive evaluation along with our learning and development team, especially looking at how we are responding to domestic violence and human trafficking. And we continue to do, ongoing evaluation of our bystander training too.
Thank you for that. Just as a ward counselor in the South End, I'm aware of activities that go on in some of those hotels and that there's still issues in our city, not denying them by any means. Have recently done my police ride along and we went to the hotels and watched some of the activities happening. So just it's important work and that we continue in that section. So thank you. Those are my questions and comments, wanting to make sure that the bystander training hasn't dropped off somewhere. Looking for further speakers. I see none online. I see none in chambers. Sorry, Counselor Stevenson. And just to let you know, when we get to the vote, I will do yays and opposed.
That's all I was going to ask was for a recorded vote.
Yep, happy to do that. So I will do the yays first. It's going to be a hand vote of all in favor of receiving this report. Okay, and all those opposed by a show of hands.
Motion carries.
And a recorded vote?
Yes, that will be noted, Counselor.
Okay, so that takes care of all our items for direction. That was concluded 4.1 through to 4.4. Under deferred matters, additional business, I was not made aware of any. Okay, we have no confidential items. That would move us to an adjournment. Okay, sorry, I was just throwing a wrench in it just to make sure that September 10th is the next time we are back together for a meeting of audit, which would move us to adjournment for this meeting. I have a mover in Counselor Cuddy. I would need a seconder in Counselor Stevenson. A hand vote of all in favor of adjournment today.
Motion carries.
Thank you everyone for your time, and I will see you September 10th.